Welcome back. Now, Discovery reported a 12% rise in annual attributable profit. This as new business grew 18%, boosted by strong performance from Discovery South Africa and Vitality Global, which also make the financial services well positioned for sustained growth. Discovery CEO Adrian Gore joins us for more insight on the performance. Thank you so much for your time, Adrian. A significant increase in profitability during this period. What would you say encouraged you the most?
I think at the group level, a kind of entering a different phase of growth. I think our new initiative, especially Discovery Bank, has really come on stream and is now turning to profit. At the same time, all of our businesses tended to fire well. The bank was absolutely brilliant. Pingun Health in China was brilliant. So we've had a very good period, but I think strategically it is important for us. We're in a phase now of really good growth.
That new phase of growth, what does that structure look like right now, and what pillars will inform the growth of it?
Well, I think just the manifestation of it is pretty clear. We expect growth to be 15 to 20% a year for the next number of years. More cash generation. And the pillars are fundamentally, we've invested in big initiatives. Discovery Bank, invested 13 billion to build the bank. Invest a lot in the UK. We've made a lot of big investments in the process of building an organic business. The real fundamental issue is that those investments are now done. So there's very little investment required going forward. At the same time, these businesses are now coming through strongly. So the mathematical effect of that in growth, and cash generation is very strong.
Yeah. It's quite interesting also that you talk about this kind of a long investment drive that you have been going through, that of course was at kind of the expense of your financial metrics, but we are seeing there a turnaround, but also how you really navigate that investment, versus cash generation. Where would that, extra capital now be going at this point?
Well, firstly, to say that if you do want to keep growing at a rapid rate, you've either got to make acquisitions or you got to grow organically. And if you're growing organically at scale, you've got to build big businesses, else they don't matter. So, the kind of stock choice you have, and this is a choice you made in kind of a number of years ago, we need to build big businesses like the bank. Else you do plateau. It's obvious.
Yeah.
So I'm very pleased we did that. But when you say now that generation of earnings and manifests in earnings and in cash, and that cash, we'll see how it plays out. I mean, there's no hubris here. It will be used to pay dividends over time. Our dividend growth has been strong now, and dividends will come through going forward, but we'll see how it plays out. I mean, there's no hubris. We were trying to just show kind of mathematically how the group is evolving through phases of organic growth.
Well, in terms of that profit picture, we did have a Vitality UK there being the dark spot. Just talk to me about, what drove this pressure? What level of pain did you experience there?
Well, it's interesting. I mean, it was a difficult year, but the actual business is incredible. The quality of clients, the scale. The issue was two distinct issues. The NHS in the US is going through, in the UK is going through a very difficult time. So you've got increasingly long waiting lists for care, and that immediately people end up buying private medical insurance and therefore claiming on things that they ordinarily would use the NHS for. So our claims levels went out. We've now kind of remedied that, but that cost like £30 million in overrun. The second is more an actuarial technical issue. We're in part of the assumptions in an old book of business we wrote a number of years ago required strengthening of the basis, and that liability came through in this period. So it was two distinct things we'll bounce back from, but I'm actually pretty impressed with the business, the quality, everything. It's remarkable.
All right. Well, let's go into Pingun Health. You mentioned the strong performance that we got from there, and it also declared its first dividend. Do you think that the runway going forward is solid enough to provide further momentum for this growth?
Listen, I think that China is in a complex phase now. It's in a lower growth phase, but the demand for healthcare, if you look at the scale of the middle class, and how they've come through, would seem kind of unequivocal. And so it's a big business that covers 27 million people. I mean, it's a very large business, but it would seem that it has massive runway for growth.
Yeah.
So, and everything in the performance, if you look at it, it just was excellent execution. The combined ratio, expense levels, prudent investments. It's a very large business doing very well. So no magic, quite the opposite. Very just good execution, cash generation, paying a dividend of 30% of income, of profitability. Really, really pleasing stuff.
All right. Adrian, before we close off the conversation here, I do need to, pick your brain on your positioning of the NHI right now. I do understand that Discovery is one of the vulnerable companies when it comes to the current version of the NHI. What is your positioning in terms of, in light of the GNU, but also the interactions that you have been having with the stakeholders there?
Well, I think it would seem fairly clear from business that NHI is unworkable unless you have private sector involvement and funding. There's just not sufficient resources. The NHI bill is now an act, so it's law, but there's still a lot of debate and I think a lot of potential engagement to make it workable. We have, for the first time this week, met with government as business and had, I think, a very, very productive meeting where there's a sense of how do we find solutions to the issues. And we need to find the space to do that. I also think the business-government partnership that has been remarkably successful has built really good bridges for engagement. So I think if we can move forward in a solutionist mindset, I think that's kind of the view of the presidency and government. We need to find those spaces to make it work. This is not a Discovery issue or private sector issue. It's a sovereign issue. We have to have a healthcare system that works for all South Africans. There's too much at risk here.
Yeah.
And I must say, all parties, that's the impression I get. There's no, self-interest, my sector, this sector. There's a very good sense of engagement. So let's see how it plays out. I remain optimistic about it.
All right. Well, thank you so much for your time and giving us insights on those numbers and also the new growth phase in Discovery's life cycle. That was Adrian Gore, CEO of Discovery.